Good afternoon. Welcome to GrainTV. It's December 27th, 2013. I'm Logan Burgess. To my right here is Brock Schimbino to help break down a relatively positive end of the week for the grain complex. Jumping into the quotes here, we can see that we have March corn up a penny and a quarter. Soybeans leading to the upside, up 12 3/4 on the day. We had Chicago wheat closing higher, up 2 cents for the March contract. Kansas City wheat continuing a bit lower there, down a penny and a half. This morning, the big focus of the trade was the export sales report, and we had exceptionally strong exports reported for corn, soybeans, and wheat in those numbers.
That's right, Logan. All three commodities actually beat expectations, but I think really the highlight here was corn. We came in at 1.5, or roughly 1.5 million metric tons. We had another 500,000 metric tons sold for next year as well, so that beat the expectations very handily. It should have supported the market here a little bit more than what we saw. For soybeans, we came in above analyst expectations as well, about 720,000 metric tons there, above expectations, like I said. Wheat came in at 596,000 metric tons, slightly above expectations there as well. So very positive. All three commodities, corn, soybeans, and wheat, beating expectations, but corn was really the highlight here.
Yeah, you know, we didn't see a lot of follow through in the corn market. We're going to talk about that a little bit more in detail later in the show. But one thing that we wanted to highlight today was the wheat market. We've talked a lot about corn and soybeans this week, but I think that we had some important things to take note of here for the Chicago wheat contract. Take a look at a daily candlestick chart. You can see here that in the last 2 days trade action, we had what technical traders would call a hammer pattern here, specifically in today's action where we trade lower, we find buying interest, and we end up the day closing a bit higher. A lot of technical traders look at this as an indication that we are hammering out the bottom here in a market that's been selling off. That certainly is what the wheat market's been doing here recently. We've been looking for support around $5.90 to $6, so I think this is a positive indication that we may be finding a bottom. One thing to take note of, though, is the volume indicator at the bottom of this chart. You can see it was on exceptionally light volume, so I think that takes a little bit of credibility away from today's move. Look for confirmation of today's move in Monday or Tuesday, but bottom line, when I see this, it makes me a little bit more positive about the wheat market here.
You know, that's good to see a positive sign coming out of the wheat market. That market's been in a substantial sell-off over the last month, month and a half or so. We did see a little bit of positive price action today in the soybean market as well. If we take a look at the March contract here on the daily candlesticks, you can see that we did see a nice positive gain after a pretty sharp sell-off yesterday. We went down and tested support level right around that $13 level on the March contract. We did find some buying interest there. You know, this is supportive for this market. You know, the export sales did get us going off here early this morning, but really the thing I think to concentrate on is looking towards that January 10th report. I believe that we're going to stay within this range that we have been here more recently. $13 is going to be the low side. I would say about $13.30, $13.35 would be a good area to look at pricing on the top side.
But yeah, you know, keep in mind when you're looking at soybean futures right now, we do have first notice day coming up for the January contract next Tuesday, the 31st of December. So it's really time to start rolling here to the March contract. We're seeing a lot better volume in March here just in the last couple days. And I agree with you, Brock. Should expect serious support there around $13. I think with how tight domestic stocks are and a South American crop, which is not yet out of the field, obviously, a lot of people are going to be hesitant to sell beans below $13. As you said, Brock, look for that January USDA report to give this market some direction. Last all here, let's take a look at corn. Kind of a mixed trade there for corn. Not a huge day in terms of action. As you can see from the chart here, we're basically in the middle of a recent trade range that we've been in. Yesterday, we found some sharp selling in the corn market. Certainly could have been a result of some of the cancellations out of China that we talked about on the show, but really kind of a mixed trade here for corn. 420 should act as good support for the March contract, but I think similar to soybeans, Brock, that January USDA report is really going to give this market some direction, and particularly for corn over the next 2 or 3 weeks, keep an eye on Argentina weather. We know that the stress to the crop that's expected in northern Argentina has been putting a little bit of a weather premium in the U.S. market, so keep an eye on that. We'll certainly help keep you posted on that front here on GrainTV.
You know, even though we ended the day positive on corn, I'm kind of surprised that we weren't even more positive, given the sell-off that we had yesterday, heading into the end of the week, and then those export sales that we saw this morning. You know, 1.5 million metric tons was almost double what the analysts were expecting. We only moved up by a penny and a half here today, so that's a little bit concerning that this market could have, you know, a little bit less potential to the upside than what we were thinking here earlier. You know, something else that could have been weighing on the market is we got the ethanol production figures out today as well. Only we moved down by about 2,000 barrels per day there as well. So moving back just a little bit on ethanol production once again this week.
Yeah, ethanol production has been something that's really really kind of underpin this corn market, and it's still relatively strong seasonally, but there are some concerns about it, certainly due to cancellations of DDGs by the Chinese, and just seasonally when we expect to see ethanol usage taper off here a bit. We'll help keep you posted on ethanol usage, though, moving forward here on GrainTV. I think it's going to be important to watch this trade open up Sunday night, maybe on Monday, because as we talked about a little bit, certainly saw some light trade action here to end the week during Christmas holiday. Next week we would expect a resumption of normal trade activity. We do have the markets closed on Wednesday for the first of the year, but a lot of people on vacation should be returning. If you guys want mobile quotes on any new mobile device that you got for Christmas, you can visit us at grainhedge.com and take a trial there. And as always, if you have questions about getting started or need help, give us a call at the office. Our number is 877-472-4607. Thanks a lot for joining us here on GrainTV to wrap up the week. Have a great weekend. We'll see you back here on Monday.